Hello again. Today we're going to talk about bank accounts. And again, not a lot of numbers in today's lesson. I'm sorry. If you're working through this on your own, there's a lot of stuff to write down. That's the bad news. The good news is there's not a lot of calculations. So there's hopefully pretty easy to understand most of this stuff. All right, so let's talk about bank accounts. What's a bank account? It is an arrangement made with a financial institution. Remember financial institutions like banks, and credit unions, and trust companies, and all those sorts of things. An arrangement made with a financial institution whereby they are able to hold and use your money. So you put your money in the bank or in the credit union or wherever, and they hold on to it for you, but they're also able to use it, right? This is part of the way that banks and credit unions and stuff make money. They take your money and then they lend it out to other people and collect interest on it. Oh yeah, a couple things there. With a bank account, you're allowed to deposit money, which is where you add money to your account, of course. You put money in, it's a deposit. If you take money out, you're allowed to do that too. Take your money back from the bank, although sometimes there are restrictions and you might get penalized if you do it too early, etc. That's called a withdrawal, or the verb is to withdraw the money. Deposit is both noun and verb. You deposit a deposit. You withdraw a withdrawal. Why bother having a bank account? Well, there's a few reasons. In years past, quite a long time ago now, people didn't do this very much, use banks. Often just stuff the money in the drawer in their, bedroom or something like that. Why don't we do that? Some people do, but it's not a great idea. Number one reason probably, safety, right? If you have your money stuck in your drawer and there's a fire, bye-bye money, there's no way to get that back. You get robbed, it's gone. But with a bank, even if there is a fire or a robbery at the bank, your money's insured. So you're still going to be owed that money. Number two, simplicity. Instead of carrying around wads of cash, you want to go out for a nice dinner, maybe go to the club in a few years, buy a few drinks. You don't want to walk around with a few $100s in your pocket or more. Big spender you. It's nice just to have a card or two that you can carry. It's a lot easier. You don't get that unsightly bulge in the back of your jeans. Gotta hate that, right? Just having the nice thin card in there is much nicer. Number three, why have a bank account? Because it helps you to manage finances. You get account statements, right? They used to mail these to you. You still can get them mailed, often for a fee. But you can also look online and see all the money you've spent, all the money that you've earned over the last month, and it really helps people track where are we spending too much money, where do we need to cut back, do we need to earn more money this next year, do I need to get another job or ask for a raise. All that kind of stuff's easier if you have a bank account and you're getting a account statement, rather than you're just making your best estimates. I mean, unless you're doing great paperwork at home, but most people don't do that. But the bank does perfect paperwork, or they should. Number four reason to have a bank account, saving, right? Earn interest. You put money in the bank, in some accounts, not all, as we'll talk about in a second, and you can earn money just by having it sitting there in the bank. You can earn interest. So what's interest? If you don't know, just use the word. Interest is a fee paid for borrowing or using someone else's money. So yeah, in fact, you can think of it that when you put your money in the bank is borrowing your money, and they'll pay you some interest. Now, sadly, the interest rate they pay isn't all that high. We'll take a look at that in a second. You also get charged interest if you borrow money from the bank. People do that too, right? You want to buy a car, buy a house, you go and take out a loan, get a mortgage. You now can use the bank's money, but you have to pay them interest. Guess what's bigger, the interest you pay the bank or the interest the bank pays you? Well, of course, it's the interest you pay the bank. The banks have it all set up for them, right? It's way higher. All right, I've done this in a very poor order here. Let's see, what should we do next? Well, we're talking about interest, which is a good thing when you put money in the bank. Let's talk about more good things. Incentives. These are things that the bank will offer to customers, or I should say financial institutions every time, not bank, right? Because again, it includes the credit unions and the trust companies and the loan companies and all these things. Anyway, It's anything that a financial institution offers to customers that makes doing business with that institution seem more attractive. So it's things that they try to do to make you use their business. So there could be something like a welcome bonus. So for example, some accounts, it'll be, if you open this account at our bank, we'll put $250 in the account right away. Just by opening it up, boom, you got $250 in the account. There could be a free safety deposit box. For some people, who cares? But other people, that might be really appealing. Oh, I have something I want to put in there. I have my grandmother's jewelry, which I never want to lose, so I want to put that in a safe place. So the free safety deposit box could be very attractive. Sometimes you'll see deals where if you open an account, for example, you might get a free iPad, or you could get a TV or something. So they'll try all sorts of things to try to get you to sign up with their bank. Maybe they offer something like unlimited checks. Again, for some people, there might be checks. I never write checks. Well, other people, like my mom, would probably unlimited checks. Yes, I want to be part of that bank. Okay, so those are all good things about banks. The incentives, the interest. Now let's talk about some of the bad things. The main thing that's bad about banks, well, I don't know, that annoy me and many people are the service charges, also called the fees. Right? These are costs charged by financial institutions for providing services. And they charge you for almost everything. Some accounts will charge you for putting money in the bank. I mean, you're putting money in to give them, and they're charging you for doing so. Crazy. Some banks charge you for taking money out of the bank. It's your money, and yet when you take it out, they charge you a fee or a service charge. Lost card fee. I get that. You lose your bank card, they probably should charge you something. That one makes sense. Minimum balance. For some accounts, if you don't have, for example, $1,000 in the bank or whatever amount, 2,000, could be even higher if it's a really high-end account, then you get either no interest or they'll even charge you a service charge. ATMs, we all know this, right? If you are any bank account, you know the pain of using an automated teller machine, the ATM, the bank machine, and if it's not your bank, you often get charged a fee, which is painful. Overdraft, you know what that is? That's if you write a check and you write it, for example, for $100. You owe someone $100. You say, hey, I'm going to write you a check for $100. Just one problem. You only have $40 in the bank. So when they go to cash it, they're told, we can't cash this for you because the person doesn't have enough money in the bank. That's called an overdraft. That's a big mistake on your part, and you get charged for that. And I get that. There's another one I totally understand. But some of these fees you get charged are crazy. You basically can get charged for almost every transaction you make. What's a transaction? It is any activity at a bank. So this could be activity done in person. Could be that's like if you actually walk into the bank, I mean. Could be done online on your computer, the bank's website. Could be done by telephone. Could be done at the ATM. I forgot to put that down. I'll add that there. Or ATM. So what sort of things are we talking about? We're talking about depositing money, withdrawing money, paying bills, transferring money from one account to another, whether it's your own accounts or maybe you're transferring money to a friend, right? An e-transfer. Pre-authorized payments. That is where, for example, let's say you have a Netflix account. I can't remember how much we pay for Netflix. $10 a month or something? I can't remember. Anyway, let's say it's $10. You can set up that at the same day every month, let's say the first of every month, that you automatically will have $10 deducted from your account to pay for your Netflix bill. Smart thing to do. That way you don't forget to pay your bills. ATM use, check use, all these are transactions, and in many cases, all these transactions have service charges. Okay, how do you get a bank account? You guys are at the age that if you don't have one, it's time to start thinking about getting one. It's actually very important that you get one eventually, and I would recommend sooner rather than later. We'll talk about in class why it's important to do so. So, all that's required is to go in person with proper personal identification. You're going to walk in with a driver's license or your passport, permanent resident card, Immigration Canada form, social insurance number. They might ask for 2 of those things or maybe just 1, but you will have to go in person. Okay? You do not need money and you don't need to have a job currently in order to get a bank account. You could walk in with no money and just say, hey, I want to open up an account, and you could definitely do so. So let's take a look at some of the different accounts. There's basically 2 main accounts, right? Basically, you only need to worry about savings account and checking account. And what you should do over the next bunch of years is open these 2 accounts. You should get 2 accounts, 1 checking, 1 savings. The first one you should open is a checking account. So let's look at that one first, actually. A checking account is best for your day-to-day banking, right? You put money in one day, a few days later you want to take some money out. So with those, there's no or low service charges for things like debit card purchase, right? You're at the restaurant and it's time to pay the bill and you pull out your debit card. With a checking account, you're probably getting charged nothing, hopefully nothing, or maybe a very low service charge. Writing checks, it's a checking account, so there's obviously checks, and you often have no or low fees for that. Pre-authorized payments, I talked about that, paying the Netflix bill or whatever, paying other bills as well, online or in person, using the ATM. All these things have no or low service charge with a checking account. However, there's a drawback. The drawback is there's often no interest rate at all. None. You put your money in the bank and you're not earning any money. If there is interest rate, it's going to be really low. But it's important to get a checking account. That's the day-to-day banking. Savings account should be the next one you should get. This is where you're going to focus on savings. Surprise, surprise. You're not actually going to do many actual transactions, right? You're going to put money in, but you're going to hopefully not be taking money out very often. Yeah, there will come time when you need to take money out, but that shouldn't be every week, probably not even every month. For the most part, you should just be putting money in and leaving it. With savings account, with withdrawing money, you actually are often going to have service charges even for just withdrawing money. You don't want to be withdrawing money often when you have a savings account. But the good news is about savings account is you earn interest. Now, there is some bad news about that too. For you guys, with the accounts you start with, chances are you're going to be earning interest rates like 0.01%. I mean, that's pathetic. So bad. And about the highest you're going to see anywhere in Canada is about 2.5%. Even that, I mean, it's not bad. You put $100 in, you do nothing all year, and you earn $250. Doesn't sound like much, but if you could have $100,000 in the bank, suddenly you have an extra $2,500. So, the more money you put in, the better it can be. We'll talk more about that later. So yeah, you can get interest. You will get interest with a savings account, but not with a checking account. Wouldn't it be nice if you could have both of those things in one account? Well, you actually can if you can find a combination account. So these do exist. Basically, they combine the best parts of a saving and checking account. You can write checks, so it's like a checking account, but you will be paid interest. Often you get paid interest if you have a sufficient amount of money in the account. So for example, if you have under $1,000, maybe you don't get any interest, but if you have more than that, you would get interest. Okay, tax-free savings account. It only started in the 1990s. I don't know, around 96 or something. And basically what it's a type of savings account. All the rest of these things, 3, 4, 5, 6, 7, 8, these are all different either savings or checkings accounts, I would say. So this is a type of savings account where no income tax is paid on interest earned. For most accounts, most savings accounts, if I earn $552 in interest one year, I'm going to have to pay tax on that, right? At the end of the year when it's time for me to pay my tax, I'm going to have to pay some tax on my earnings. But with tax-free savings accounts, you don't pay any interest. So this is a good thing. So why don't people just put everything into tax-free savings accounts? Because there's a maximum amount you can put into it. Right now, the maximum amount a person can put into their TFSA, it's called, tax-free savings account. The most that someone can put in is $6,000. It was $5,000 when it started in the 1990s, and it's connected to inflation, and there's some kind of formula there, and we're up to $6,000 now that you can put in at most. So, first goal I would say, get a checking account. Second goal, get a savings account. And then third goal, start looking for maximizing your TFSAs, and that's a good start. By the way, I should have said, why don't we all just do combination accounts? Well, you have to watch for all these accounts. I mean, I should probably say this over and over. You have to do your shopping, right? You got to look at all the different accounts that are available to you and figure out what's the best option for you. Some accounts provide lots of checks. Maybe that's not something important for you. Some accounts have higher interest, but you have to pay a little money every month. Some accounts allow lots of transactions. Some allow very few transactions. And you have to figure out what meets your needs. Try to reduce the amount of fees, service fees, as much as possible, and try to maximize interest as much as possible. Got to shop around. Okay, a joint account. This is either a savings or a checking account, And it's basically a bank account owned by two or more persons who share equally in the rights and liabilities of the account. So my wife and I have a joint account for our savings. My wife and I have a joint account for our checking account. We can both deposit into both those accounts. We can both withdraw from both those accounts. You know, I trust my wife completely. She trusts me. But she could go and take out all the money and head to Brazil or something. Don't think it's going to happen. Any good thing that happens with the account, we share it. Any bad things that happen with the account, if there's fees, overdraft, someone writes a check that's too much, we're both on the hook, right? I can't go to the bank and say, it was my wife that paid that. I don't want to have to pay. No, we're equally invested in that account. Okay, low cost or no cost account. Please listen carefully because this definitely applies to you. So I've done joint account, we're down to here. So a low cost account is just what it sounds like. It means you don't have to pay much per month for your bank account. At most in Canada, it's $4 per month, and that would be considered a low cost account. So that's great. Why wouldn't we all just do that? Well, we're not all able to. It might not be, you might be putting too much money in the account. And they say, if you put that much money in the account, then we're going to have to charge you more. But for people just starting out, people your age, you can probably get a low cost account for sure. Unfortunately, with those low cost accounts, often the interest rate's not that great. Now, no cost account. Wouldn't that be nice not to pay anything? This is something that is available to you because it's available for youth, that's you, students, even when you're in your 20s, you're not really, I guess you're still youthful, but youth, I think they usually mean up to teenage years. Even as a student in university, college, trade school, whatever, you're still a student and you're eligible for no cost accounts at many financial institutions. Seniors can be getting no cost accounts, and the disabled people can be getting no cost accounts as well. So check those out. Those are options you have that I don't. I'm jealous of you. Often those will be your best options at this age. But again, you should be looking for things that give you good interest if it's a saving account with as few fees as possible. Okay, a US account. Again, it's a type of savings or checking account, and basically it's at a Canadian financial institution, but it's aimed at people who do a lot of transactions in US dollars or who travel to other countries where US dollars are used, and everything's done with US dollars. You deposit money in American funds, you withdraw funds in American bills, so it doesn't work for me because I don't go down to the States a lot, but some people have business interests or family down there or travel a lot, and that could be a good option. And finally, a small business account. Again, it's just a type of savings or checking account. It's specifically designed for companies rather than for individuals. And it's going to try to meet their needs. So some of the things that might come into account, maybe there's more free transactions, right? I imagine a lot of small businesses, there's a lot of deposits and maybe a lot of withdrawals too. So you'd want to have a lot of free transactions if you have a small business. Perhaps you're getting loans more easily with your account at a small business account. Often small businesses need to take out pretty significant loans. Maybe you have multiple debit cards available so that you can give debit cards to different employees so they can go out and buy products and stuff like that. Maybe there's smooth integration with account software, right? Many small businesses use their own software to keep track of their budgeting and all the stuff coming in, all the products being sold, and you want your bank to be able to integrate with that smoothly. So these would be examples of features offered with a small business account. All right, that's a lot of stuff, but remember, for now, what you would want to focus on is number 1 and 2, and perhaps number 3 if you can find a good one, savings, checking, and combination account. Okay, there you go. Lots of information again today. Hope it's not too dull, and have a good day. Bye.